Hello, this is Amy Schreiber, MCOL Content Manager, and I'd like to welcome our listeners to today's podcast session. We are pleased to have Doug Sherlock, Senior Healthcare Analyst for Sherlock Company, joining us today. Doug is here to give us his quarterly insights into financial markets of health plans.
Thanks, Amy. In this podcast, we'll review the performance of the managed care industry for the third quarter of 2019 and year-to-date 2019. We'll also discuss sector valuation indicators and operating trends. First, I want to speak to stock prices and valuation. As of November 15, stock prices for the publicly traded health plans are up by an average of 12.3% since the beginning of the year. This compares to the 24.5% increase in the broader market measured by the S&P 500. Health plan sector market capitalization increased by 13.4% year-to-date, faster than the average increase, since sector stock price increases were skewed towards the larger plans. Stock prices for 7 of the 8 plans gained ground so far, led by WellCare at 32%, Humana at 17%, Anthem at 13%. Triple S grew by 13%, Molina grew by 12%, United Health was higher by 8%, and Cigna by 3%. By contrast, Centene fell by 0.1%. Valuation metrics were lower since the beginning of the year, with the price to trailing 12 months earnings down by 23% to 16 times, and price to 2019 earnings were down 33% to 15 times. Price to operating earnings grew by 4% to 18 times. Despite strong earnings for the universe, Triple S was the primary driver for declining price to trailing 12 months earnings metric. Triple S had a 16 times trailing 12 months earnings multiple in August, compared to a 9 multiple in November 2019. This brought down the average trailing 12 months price to earnings multiple by 0.9. Triple S's operating earnings improved from the second quarter at $25 million to $115 million in the third quarter of 2019. However, since the stock price fell by 24% to $19.60 from $25.75, that affected the price earnings multiple. Also, non-health earnings declined by $114 million to negative $100 million compared to the second quarter of 2019. Price to sales fell by 14 times to 0.63 times sales, and price per risk member fell by 14% to 4,700. However, the price per total member increased by 12% to almost $3,000. All rates of change, by the way, are calculated, holding the universe of health plans constant in both periods. Since our last podcast in August, health plan stock prices are on average higher by 7%, with a health plan market capitalization higher by 12%. To $505 billion. Once again, growth was skewed towards the larger companies. The S&P 500 grew by 8% since August. Health plan valuation metrics trended higher since August, except for price earnings multiples. They were, for reasons we discussed earlier in connection with Triple S, were lower by 5.2% to 16 times from 17 times in August. So, on to our review of operating trends. For the third quarter of 2019, combined ASO and risk membership decreased by an average of 1%, while increasing by 0.25% in total to 134 million. I should explain. By average growth, what I mean is that the average of each health plan's growth rate. The total reflects the change in the combined membership of the health plans as a whole. This average and total convention is something that we will refer to from time to time in all our other metrics. Fully insured risk membership increased by an average of 0.2% and in total by 2% to 75 million members. Medicaid plans experienced an average decline of 1.5% and total growth of 1.7% to 20 million. Commercial plans reported an average increase of 1.3%, but a total growth of 2% to a total of 56 million risk members. Molina reported the largest decline at 16%. Anthem had the largest increase at 7% compared to the third quarter of 2018. The proportion of total members served under self-funded ASO arrangements grew by 0.1 percentage points to 44.8%. On average, the plans posted a 2.2% decrease, but ASO membership was up in total by 0.6% to 60 million. Again, you see some skewing in the larger plans being more focused on ASO. Revenues for all plans increased on average 12% and in total by 11% to $143 billion. Medicaid plans reported $30 billion in revenues with an average increase of 16% and a total increase of 17%. WellCare and Centene posted the largest percentage gains in revenue for all plans, higher by 41% and 17% respectively, compared to their third quarter 2018. Commercial plans increased by an average and total of 9% to $112 billion. Anthem posted the largest increase in revenues. Premium rates for all plans grew by an average of 11%. Medicare and commercial plans experienced an average premium growth of 6% and 18% respectively. Now, it's important to recognize that the premium rate growth does not adjust for any changes in product mix, geographic factors, or benefit design changes within the products offered by these plans. Operating earnings for the third quarter of $8.2 billion, reflecting a total increase of 2% and 6% on average. Medicaid plans reported operating earnings of $670 million, an average increase of 0.3% and a total decrease of 20%. WellCare's improvement was the strongest and only growth in operating earnings among the Medicaid plans, with an increase of 66% to $280 million. Centene and Molina's operating earnings declined to $176 million and $215 million, respectively. Commercial plans also gained ground to $8.5 billion in operating earnings, an average increase of 10% and a total increase of 4%. Average operating margins for all plans were flat at 6.5%. Medicaid plans posted a 0.3 percentage point decline to 3.3%. Commercial plans margins increased, however, by 0.2 percentage points to 8.4%. The health benefit ratios for all plans increased by 1.6 percentage points to 84.1%. By the way, this excludes the impact of favorable and unfavorable prior reserve development that we've reclassified in prior periods. The average health benefit ratios for Medicaid plans increased by 1.2 percentage points to 84.4%, while commercial plans posted a 1.9 percentage point increase in their health benefit ratio to 83.8%. The administrative expense ratio fell by 2.2 percentage points to 9.6%. Medicaid plans reported an average decline of 1.7 percentage points to 11.3%, while commercial plans experienced a 2.5 percentage point decrease to 8.5%. Non-operating earnings grew by 167% to $989 million. Non-operating earnings in our world means all the investment earnings and income earned in non-health lines of business, less all the interest expense. Medicaid plans reported non-operating gains of $30 million compared to a loss in the prior year's quarter of $4.9 million. Commercial plans experienced a total increase of $584 million to $959 million. Net earnings for the third quarter were higher for the plans, increasing by an average of 18% and in total by 12% to $7.1 billion. Medicaid plans had net earnings of $496 million, a total decrease of 12% and an average increase of 14%. The average decrease reflects the 66% decrease in quarterly net earnings for Centene. The commercial plans generated $6.6 billion in net earnings and a total increase of 15% and an average increase of 21%. I want to close by touching on two key environmental factors. Each fall for the past 25 years, Sherlock Company has polled health plans for their premium and medical loss ratio expectations. This year, respondents included plans that serve 21% of all Americans covered under fully insured commercial, group, and non-group products. Health plans are expecting premium rate increases for 2020 to grow by 6.6% for group fully insured plans, while growing by only 1.2% for individual plans. Group and individual plans premium rates both increased. The group segment increased at a faster pace than last year by 2.8 percentage points, and individual has a lower growth rate than the previous year by 1.9%. Healthcare trends are expected to be lower for groups, resulting in health benefit ratio decrease of 0.8 percentage points. However, for the individual plans, the healthcare costs trends are expected to increase by 2.7 percentage points for a resulting increase in the health benefit ratio. The modest premium growth amplifies the need to manage administrative costs to enable your health plan to sustain a competitive advantage. Please email me if you have an interest in the full results of this important survey. Also, since we last spoke, we completed the 2019 editions of the Sherlock Benchmarks and are beginning to form our universes for 2020. This relates to the publicly traded companies that we've been discussing in a couple of ways. First, some of them are among the users that serve 3/4 of all insured Americans with health insurance. We gather that the optimal management of administrative expenses by yielding higher earnings leads to superior shareholder value, which of course is the object of the exercise. Moreover, optimizing administrative costs should help ameliorate industry risk related to the rhetoric of presidential contenders concerning Medicare for all. The importance of optimization is most vividly described in MedPAC's report to Congress on Medicare payment policy in April, since it actually bears on Medicare as it exists right now. I'm going to have an extensive quote, and I apologize for that, but they can say it better than I can. Private MA plans often have flexibility in payment methods, including the ability to negotiate with individual providers care management techniques that fill potential gaps in care delivery, that is, programs focused on preventing avoidable hospital readmissions, and robust information systems that can potentially provide timely feedback to providers. Plans also can reward beneficiaries for seeking care from more efficient providers and give beneficiaries more predictable cost sharing. One trade-off is that plans typically restrict the choice of providers. By contrast, the traditional fee-for-service Medicare has lower administrative costs and offers beneficiaries an unconstrained choice of healthcare providers, but it lacks the incentives to coordinate care and is limited in its ability to modify healthcare delivery. In short, in the opinion of MedPAC, the Medicare program has providers of insurance that represent important trade-offs that only consumers are able to weigh. Again, we completed publishing the 2019 Sherlock benchmarks in the past month. Collectively, they represent the results of 40 health plans serving 52 million insured Americans. As implied earlier, their actual use is far greater than this since the benchmarks are available for license even for those who do not participate. Summary results on each of the universes are available for free at the Sherlock Company website. In addition, we are beginning the process of developing a panel for the 2020 cycle. Based on the level of interest so far, we expect the universes to be at least as robust as 2019. If you fall into any of the sectors noted above, that is Blue, independent provider sponsored, Medicare, Medicaid, please be in touch with us. No one knows who originally offered the aphorism, manage what you measure, but it nevertheless contains wisdom. Such measurement implies comparisons with other excellent organizations. The Sherlock benchmarks may be helpful to you in managing the activities that you provide to all your members, insured or not. As always, you can get a transcript of these remarks through MCOL or Sherlock Company. We look forward to hearing from you. This is Doug Sherlock of Sherlock Company.
You've been listening to Doug Sherlock share his quarterly insights into financial markets of healthcare.